I like to get started with you guys today talking about the real estate and kind of what's going on just nationally, right? So we do focus on veteran issues here and also the VA loan, but we want to talk about real estate from a holistic standpoint and not always just the VA loan, because things going on outside of that particular product and outside of veterans obviously is going to impact the whole entire market. Okay. So one government product that's impacting the entire market right now is that dang pesky 40-year mortgage they talking about. Ken, have you heard about that, man? You heard about what they doing with that?
Yeah, well, I kind of heard a little bit of buzzing out that as a veteran myself, I try to gravitate to the VA loan, but just in regards to again any other loan products, I know just as well as any other veteran knows there are many loan products out there that can ultimately get you to your real estate success. But I did hear about it. I have not dived into it, but please inform us.
Yeah, absolutely, sir. Absolutely. So yeah, what's going on? So you have two different types of government products, right? You obviously have the VA loan, and then you have the FHA loan, which is for non-VA borrowers to be able to purchase a home with 3.5% down as the minimum down payment for that program. Okay. So what they're looking to do right now is to have a loan product that's you could finance for 40 years, right, at a fixed rate. Now, there's a whole lot of misinformation in the news making it seem like you could actually go out and get that product as a new mortgage. No, you cannot do that, okay? You cannot get a 40-year loan as of right now. People saying May 8th or whatever that date is. You cannot get a new 40-year loan to buy a new property or even to refinance that property. Okay. You cannot do that. That product does not exist in that way. That product is a loan modification product. Okay. So basically, with a loan modification, that product is designed for someone that has financial hardship and they ain't been paying their mortgage for at least 3 months, maybe 6 months or a year. And that loan modification is for them to avoid foreclosure of their property. So if you're not at least delinquent about 3 months and they start knocking at your door, like what my mortgage payment is, you're not going to be able to qualify for that 40-year loan. Okay. So if you could afford your current mortgage or you're thinking about buying a new home, don't think you're going to be able to jump into that product.
Mm-hmm. Got it. So
So
basically, so what you're saying, I mean, just to clarify, I just want to make sure everything is in the correct nature. So when we're talking about a 40-year mortgage, you're not able to progressively go out to go purchase a home to be able to garner a 40-year mortgage. This is specifically only someone who is in a position that it was haven't been paying mortgage or having financial hardships, who doesn't have the capabilities to do that. Correct?
correct. Those are the only people. So you cannot do a voluntary refinance. So let's say, well, I don't want to pay my mortgage. It's too much. Can I just refinance to a 40-year mortgage? No, you cannot. I mean, I guess you could try to default on your mortgage for a couple months, not make payments, and see if your servicer will offer you that. But I mean, if you've been paying it on time so far and you're not behind, why risk it? Because it's going to be on a case by case basis on whether they'll offer that. And that's very important to understand. Just because you may have a FHA loan, right, and you stop making payments for a couple months, doesn't mean your servicer is actually going to want to offer you that loan product just because the FHA actually approved it, right? So there's two different things that have to happen, right? You have to already have a FHA loan, and then you have to be defaulting on that loan, and then your loan servicer actually has to approve you to be in that type of modification. Okay, so if you have a conventional loan product or you're not really behind that much, a loan modification has been a product that's been around for a while now, actually, and they made some new modification products during the COVID environment. Okay, so there's some different creative things you can do, and even certain lenders have different programs where if you have like a temporary hardship, you might be able to skip one payment and different things of that nature. So don't try to default and not pay your mortgage for 6 months thinking, oh, yeah, that's going to automatically get me into that 40-year loan product and vastly reduce my payment, because it might be a pie in the sky decision for you. And that's not anything that you want to do right now, right? You only want to use that program and that product right now if you truly are having some hardships and you really need to do that. Because what happens when you get a 40-year mortgage is that your payment goes down, but you're going to be paying a lot more in interest, right? So you're already with just a regular 30-year mortgage paying double, almost triple, depending on your interest rate, based on what you borrow, right? So if you extend that 10 more years, you could be paying tens of thousands of more in interest, and you just don't want to do that if you could avoid that. And especially if you plan on being in that home long term, it may not be a good decision for you to have that lower payment if you could definitely afford to maintain what you currently have.
Got it, got it. Because I was going to call the bank and say, hey, please stop my mortgage payment because I got a modification that I can. But yeah, so yeah, man, just unpack that a bit because I just want to kind of be able to give it to the people in digestible amounts. So, from my understanding, basically, Mr. Jones, that when we're transitioning here in regards to the 40-year mortgage, we have to understand that one, our lender has to approve that, right? That's something that a lender has to approve. Two, that again, just because it is FHA approved, that's not necessarily mean we ultimately automatically qualify, right? And ultimately we have to be in position of hardship to be able to execute that. But it sounds as though that there's other modification that can be applied otherwise.
Correct. Yeah. So, I mean, they already had the FHA streamline kind of refinance program. They've had other modifications. If you have your VA loan and you're having some hardship, there's some modification available for you as well. So you have to
Okay.
look at your loan product as a primary guideline of what may be available, but ultimately is going to come down to what your loan servicer is going to offer under their particular portfolio.
So, as a subject matter expert, let me give you a scenario that possibly that it may happen that the people may want to know. So, say for instance, if I'm a person who is behind on my mortgage 6 months, and I do not have the money to pay, but I am still willing to pay my mortgage moving forward. Is there any suggested tools of modification that you know offhand that can be utilized?
Yeah, absolutely. So there's some standard modification programs. What they'll do is they'll modify your mortgage where they'll take those 6 month payments and they'll just put those on the back of the loan. Okay, so they won't extend your loan out any. They'll just put those on the back of the loan, so to speak. They may do it where they'll impact your payment minimally, or they might extend it out for a year or so. So let's say you're 3 years in a 30-year mortgage. In that particular situation, they might just re-up and just do a total new 30-year to kind of stretch those 6 months of payments out so you don't
Mhm.
see that increase, right? So what they're going to do is they're going to customize it to your situation. But basically what they end up doing is putting it on the back of the payment. So they
Mhm.
might do it that way where they might just give you a total a new 30-year mortgage, or what they'll do is they'll just extend your current mortgage 6 months, right? So if you were
Mhm.
going to end and your last mortgage payment was going to be January of 2050, now it's going to be July of 2050, right? So they'll just do it that way, so that you have minimal um, discrepancy in what your payment is, and also it doesn't really further how much interest you're going to have. Because if you stretch it out over that next 3 years, those 6 months of payments out over 3 years, it's going to lead to you having a lot more interest versus if you just add 6 more payments on the back of that loan.
That makes sense. That makes sense. So, for anyone out there that's having any type of issues in regards to that, please reach out to us, as we want to be able to seek help and be able to provide assistance to everyone, not only obviously the veteran community that we serve, but we also want to be able to help anyone in need. So, again, our subject matter expert here in the real estate industry, Mr. Kayvon Jones here, I think he'll give you a beautiful pathway and success. So, in regards to that, thank you so much for that, sir.
Yeah, absolutely, absolutely. And yeah, and it gets to the point of what I want to bring up is how this impacts veterans, right? How this impacts all of us as far as that goes. If you're looking to purchase a home, and, there's been several news articles. Oh, just wait to buy, wait till the interest rates go down. There's going to be more inventory soon. People are going to get foreclosed on, those different things like that, right? This is just a sign that the government has just deemably made the real estate market too big to fail, right? Because they're going to start getting creative to really keep people in their homes. So a large number of foreclosures, some people forecasted, there are going to be millions of foreclosures coming up in the next couple of years. Where are they going to come from, right? Because these FHA loans are not going to get foreclosed on. And those are typically the people that are at the most risk because they put the least amount of down payment. They don't have that 20% cushion. They're not an investor where they had 20% or more on those loans. So, that's where a lot of foreclosures would come from, those primary residents getting kicked out of their homes, which is a very unfortunate thing. I mean, it's kind of crazy that some of the speaking behind it is that we kind of prey on the downfall of others to save some money. And I definitely understand capitalism, but you ain't gonna capitalize that way. Not today. Not today. Not in the next couple years, man. That's not gonna be available to you. So what you have to think about is that, hey, if you're in a position to buy and you need to purchase a home, you definitely just need to kind of bite the bullet with that interest rate and go ahead and do that, especially if you're using that VA loan product. You don't have to put any money down. If you're at least 10% service connected, you don't have that funding fee. If you're looking at doing your benefits, go ahead and reach out to Veterans for Veterans. We'll make sure that we review, get you at least 10% service connected. If you qualify for that, which pretty much all veterans have a slew of issues going on with them, they'll definitely get them at least 10% service connected, so you will not have to pay that funding fee. Purchase that home, man. There's really no reason to continue to pay rent if that's your goal and you're in a position financially and with your employment to do so.
For sure, for sure. At the end of the day, we want to be able to not only access the benefits, but maximize them in every type of way, whether if it's a VA home loan, healthcare, compensation benefits, what have you. At the end of the day, if we can be able to service you in those directions, that's what we want to do. So give us a call. Again, at the end of the day, we want to go ahead and make sure that we're obviously giving you the top tier service, but not only top tier service, but also providing you the top tier amount of benefits.
Absolutely, for sure. And stop listening to random people that aren't licensed professionals or some sort of expert in their field, right? 'Cause if they're not committed to that topic and working on that day by day, they might have some wonderful insight on some things, but they're not in the industry. They only are looking at those news clips and they don't really understand. And that kind of gets to where we're going with talking about these proposed changes in the veteran benefit space, right? So you want to make sure you're listening to experts regarding that. So we're going to get into telling you about that. Mr. Davis has some wonderful information on that side. So definitely, let's get into it.